Okay, so today we're going to talk about something called assumable mortgages, kind of a unique financing option that doesn't get a lot of love out there, not a lot of people talking about it, and has some potentially really big benefits. So grab a cup of coffee, sit down, relax, and let's get you caught up. Now, assumable mortgages can be a real game changer for both buyers and sellers. And even though they're not always top of mind, with this option, a buyer doesn't just take the property, but they're also taking over the current owner's mortgage terms, including the interest rate and payment schedule. It's a rare option, but worth considering to bring more value to the table. Now, what exactly is an assumable mortgage? In a nutshell, an assumable mortgage allows the lender to transfer the mortgage from the seller directly to the buyer. Now, in Canada, this is usually possible with fixed rate mortgages as long as the lender's on board. Remember that, you do need the lender on board with this. But variable rate mortgages and HELOCs typically aren't eligible for kind of obvious reasons. Now, for sellers who are considering offering this option, it's best to get a conversation going with the lender early on to understand any of the restrictions and requirements they may require. Everyone's going to be a little bit different, so be sure to reach out directly to yours. Now, the advantages for sellers and buyers. Now, for sellers, an assumable mortgage can be a fantastic selling point. Imagine being able to offer buyers a potentially lower interest rate than they could get right now. That's a big incentive and could speed up the sale and possibly even get you a better price. Sellers might also avoid prepayment penalties that often comes with paying off a mortgage ahead of schedule. For buyers, assuming a mortgage could mean big savings, especially when the current interest rates are higher than the existing ones on the property. Plus, they avoid setup fees that come with a new mortgage and all that other crap. So for those looking for a more affordable payment structure, this option can really pay off in the long term. Now, some key consideration and risks, like any financing tool, nothing is perfect. Assumable mortgages come with a few things to keep in mind. Now, on the seller's liability side, sellers could remain partially responsible if a buyer defaults on payments after taking over. A good practice here is to encourage sellers to get a release from liability through their lender. So make sure you're covered on that. Make sure it's not just over the phone. Make sure you have a written track record covering it. Now, on the buyer's down payment side, buyers need a larger down payment depending on the property's equity. If the property is valued at $750,000, for example, with a $450,000 mortgage left in the middle, the buyer is going to have to cover that $300,000 difference, which in often cases requires a second mortgage to help cover that. Now, even if you get the second mortgage at a higher rate, typically the balance is still very much in your favor in those circumstances, but obviously let the numbers do the talking. Now, for properties with minimal seller equity, like a recent purchase, upfront costs for buyers could actually be lower, making this a more accessible option. But clarity here is key. Both parties should fully understand the terms before diving in. Don't get too excited. Don't put the cart before the horse. Now, navigating the assumption process. What's the best approach? And this is where we as realtors add real value, helping clients stay informed, working with financial and legal experts to keep everything on track for you guys. Sellers want to showcase every advantage their property offers. Obviously, every advantage helps push the sale price up potentially, helps get it sold quicker for you. So obviously we're looking for every edge we can get. And a low interest rate mortgage could be a pretty big one. Now just remember, since lender approval is required, it's not a sure thing, so don't bank on it 100%, but it's another cool tool you can add to your arsenal of tricks, tips, and tools to help make sure your clients are always taken care of. Thanks for checking us out.